Okay, g'day guys. This is Brad Gilbert here. Now, just coming up to the approaching the Eurozone CPI data. So I just want to do a quick sound check, make sure you can all hear me okay. If I just get a couple of hands in the air, I'll be able to sort of kick it off straight away because there's not too much time to lose here. We've got about 15 minutes to really have a good look across the analysis, looking at the actual data and the forecast around that, as well as the looking at the technical side of things. And there's been a fair bit of activity as well. Okay, you guys have got me on. All right, now let's just have a look at this. Now, once you come back to the screens, now this doesn't matter whether you're located in the Asian session or the Asian region, I should say, the European zone or North America. What you want to do is you want to come back, and this is why we've got the templates set up the way they are. Gives you a quick, easy way to assess what's going on in the market. Now, the Asian session, probably the back end of it, we did see a little bit of dollar strength, a little bit of a move down there in the Aussie, likewise in the Kiwi. Dollar yen just poking up towards 111. And then we've seen Euro slide, once it broke down through 122.50, it had a quick sort of dip down towards just under 20, down to 07. And sterling had a little blip down under 60 as well. So a little bit of a correction, but this is, pretty normal price action for coming into a major release. Now, there's two components of this inflation number as well. The inflation number, let me just cover this first. Now, this is the final number, so it is usually quite accurate. So any sort of changes here to this number would be quite significant. And even 0.1, like 0.2 is a decent sort of level of variance for this one. But so the prelim numbers, that's where the market gets its first taste of the numbers. We did see yesterday the German numbers. Just come back up here. Inflation numbers pretty much as expected, and that is also quite normal as well. The German economy is so almost robotic. It's so productive. The numbers are very consistent. Now, the Eurozone numbers themselves, and we've seen this over time, when the Euro first was launched, in the first few years, for that matter, the inflation numbers and the employment numbers were pretty much brushed. No one looked at them. They just looked at the German numbers. But over the last couple of years, the Eurozone numbers have been coming into play as the Eurozone sort of, gelled a bit more. So look at the numbers. All we're looking for really is the like you can have these ones without food, excluding energy, food, alcohol, and tobacco. All right, but what we will be looking for is the final numbers, the month-on-month and the year-on-year numbers. Now, 0.4 is the expected number for the month-on-month. So, and the range here for the 21 institutions that have put their analysts have put their things forward, 0.1 to 0.4, and the final number 1.4 to 1.3, 1.5. Now, the main reason for actually covering this event is this is actually obviously very relevant to what's happening in Europe at the moment. The euro, if we just come up, if I just blow this chart up, come into the dailies here, you'll see, we're at like 3-year highs. If I go back here, so I'm back into 2014, you can see last time it was up here, back in the fourth quarter of 2014. It's been a long time sort of waiting, and it's now in the middle of nowhere. Now, obviously, this last, I reckon the last 200, 250 points has been on the back of, of some very loose minutes, ECB minutes last week, where the ECB mentioned they may come back to look at some of their wording from last year, 2017. Now, all that means was that they were starting to say, well, Draghi, if you remember before the October meeting, they were talking about waiting to see what was happening in inflation and a few other things to see whether they would start discussing tapering. Now, I think the whole tapering measure, it's been overdone. But what it does is the market actually doesn't wait for that. They actually will act on the actual first part of it. And that is, if they start talking about tapering, the market sort of already moves on that. That's why the move has been very aggressive. But one thing that Draghi, he's such a cool customer, probably my favorite central banker or governor, president, head for that matter. He's just very, very calm. He's like, he doesn't talk about euro levels. Whereas you see other dudes here like Nawatny, okay, says strengthening euro not helpful. You'll see all these other European officials start coming out saying all sorts of things. That can actually have a little bit of an impact. But what Draghi says, that's the main show, right? So you need to keep an eye on what Super Mario's doing and what he says. He says he's not going to mention anything about Forex prices. So the market respects that. Now, obviously, if he did at some stage, if the euro did get too high and he did mention it, well, then that is a very drastic measure that he's taken. So back to the inflation numbers and where we are with the euro. Now, a lot of the movements, if we come back up here just to the news, just quickly, I'm just having a look at across a few different things. Euro slips after hitting a 3 high on ECB talk. Now, the talk is, that there is not going to be any change from the ECB at next week's meeting. I don't think there will be either. But what they may do in the statement and the conference afterwards is start mentioning more frequently, if things pick up, and they should target specific things like inflation or employment. If they pick up, well, then we may be at a stage where we can potentially start looking at tapering our stimulus program. Now, that's sort of where we are. Now, the first couple of days, and this is not uncommon for the news services, they give you all the good news the first 2 or 3 days, then they turn it around because they can, they'll sell more papers at the back end if they can turn the currency around. And that's sort of what's happened at the moment. So this inflation number, and as you can see, it's up in the middle of nowhere, 122.30. If anything, all I had technically on euro, I'm aware of the clock here, we're about 6 minutes away. So all I had here originally was, this is the previous high around 121. Okay, 120.92 for those more accurate people. So that's sort of our real support level. As you can see, technically, it doesn't really have great, on the hourlies, a great level anywhere sort of close to sort of really get onto. So this is where the data comes back into play. Now, and one of the key things when we schedule these webinars, we don't know what the market conditions are going to be like when we get here. Now, we are here at the moment, and if you look at the currency, that's all over the place. Price action sideways. There's a lot of geopolitical influences now. There's obviously the ECB, which has been the main driver. We've had the SPD, the Social Democratic Party, not merging or not doing a coalition with the Christian Democrats, Merkel's mob. All right, so that's a little bit of a geopolitical issue in the background. We've got a few ECB officials coming out saying that strengthening euro is not helpful. So it's a bit all over the shop. What we want to see on these numbers, right, is something. I was going to get up my MT4. What we're going to see is some significant variance. Now, to really drive home the whole tapering talk around the ECB, right, we're looking for something that is, well above 0.4. You're probably looking at 0.6, okay, to really get it shooting up aggressively. Now, the hard part about this is because we don't have any technical levels, right, what we have to do is we're going to be focusing on basically the actual live data itself and where it is. Now, one of the clear things that may be an opportunity for us, if I can just get my thing up here. I've just got a few things going on. I'm just testing a few other instruments here at the moment, and I'll put them on my own main system. But now to execute this, when I was coming to, is I'm going to be trading the live numbers itself. So with that, I'll be using TRX, and one of the good things is I can drag this thing around. Once it picks up the euro price, it should populate. I can actually sort of set this up with a sort of pretty clear, some pretty clear parameters. Let me just see what's going on there. Should have already picked that up. Now, I was going in with a small trade. Now, I've just been sort of banging away with sort of 10 lots here and there. This isn't a great trade by any stretch. It doesn't have any technical levels. It doesn't have, there's a lot of conflicting geopolitical stuff. So when you're looking at euro and these sorts of things and these opportunities, you've got to assess a couple of things. Of course, look at the data and what we need to get it moving. Now, a number, say around 0.2 and let's say 1.2 year on year, euro should drift off. All right. Now, what we generally like to see on the number for the number is sort of consistent one-way move. So you can see where short-term momentum is. At the moment, it's been banging between 10 and 40 for the last 3 or 4 hours, and that's pretty loose. So if anything, if you are thinking of having a crack at this, probably even decrease your trade size even more, right? This isn't a trade that's going to really shoot the lights out of it. As I said, we want some significant variance, ideally outside the range there as well. So we've got the numbers; they're very clear to us what we've got. We've got the currency. Okay, it's not in a great technical level, so it's just a live release. So I'm going to be looking for potential variance, and then looking at either trade retracements. Primarily because we don't have this nice sort of technical level. If anything, and I think OJ in the trade zone sort of mentioned this, you can see where it's sort of stalled here, and we've got a bit of a low. This is like a sort of short-term trend line at the top here, especially when you've got a very steep level like this. It gives us something to sort of shoot towards. 122, the figure, seems a pretty reasonable sort of spot to be getting short back through that big round number. So we've got 1 minute 15 seconds. By this time, you should have some sort of plan. Now, when I'm trading the live numbers, I usually like to go with the short-term trend, which you would probably think that's up. But at the moment, the last 3 days, it started trading sideways in pretty big ranges and choppy. So this is another reason to potentially decrease your trade size. Don't get sort of caught up with the price action. I'm sort of classifying this as a pretty average opportunity with a really chunky number. That's the main reason why I picked this release itself, because the CPI number, inflation numbers are very important. They are very important for what's driving the ECB sort of sentiment at the moment. So that's where it comes in. That's the data. That's the best thing about this. Everything else about it sort of sucks a little bit. Okay, geopolitical, ECB members talking, technicals aren't great. All right, so just looking at the numbers, we've got 10 seconds to go. So I've got T-Rex set up here. I'll be able to hit either side of the market pretty quickly. I'll be just looking at the number, looking for an opportunity, and bang, smack on expectations, right? So this is where, actually, I should have mentioned this before the actual release. What you're looking for is when you actually come up to some really big numbers, and say, for instance, this had really good technical levels around it, you've got to prepare yourself. There's three potential events, right? It comes out stronger, it comes out weaker, or it comes out as expected. Because if you get really hyped up on these numbers and there is no significant variance, in this case, there's no variance at all, excluding food and energy, well, that's slightly high, but that's probably not going to do too much to it. If you don't prepare yourself for that sort of standard number, well, then, you can actually start to get some sort of performance anxiety. Now, what's a smart thing to do at this point? Now, I'm just going to keep the euro up there, but I'm just going to have a look around. One thing that I probably didn't get enough time to sort of quickly go through, you want to go through and really do a quick assessment across the board. And I've already sort of done this and probably brushed over it, but you want to go through on a potential big release like this, go through and check out where all the major euro crosses are, right? And actually tune them up. So because sometimes the best trade may not be on the major currency itself, it may actually be on the one of the crosses. Right, and you can start to look across here, euro sterling back down here towards 88.55, euro yen on the hourlies there as well. Well, it's in the cloud at the moment. It's actually not a bad little spot. 134.86, euro Swiss. I'm not going to have too much of a look at that, but one thing that is going to be in play as well today with the Bank of Canada meeting, euro CAD. So make sure you tune this puppy in as well later on, because it is a very active cross, and we've got a few levels sort of forming here as well. Now, I should have probably given you a bit of a quick heads up there. I was too busy sort of looking at other stuff. So, what do we do with this? What does it mean for the ECB next week? Well, not a lot, but it actually keeps them on track. This is what you have to understand. If it's a negative number or a weaker number, it gives them a chance to sort of deflect from that tapering talk. But inflation on track, It's ready. There's no changes there. So this will fuel the fire as such and keep those media services busy, trying to work out whether the ECB are going to move or not. I think Draghi has been very sort of precise previously. Euro's just sort of slowly climbing now. I think the downside pressure from a weaker number has dissipated. That's why we're just starting to see a little bit higher. And that's just coming into this, like just from that where I hit that high around 123.22 down to the low. I think the market was sort of expecting potential weak numbers. Since we didn't get it, there's probably a few guys squaring up. It is trading in the middle of nowhere, so there's no real good trade on Euro at the moment. That is for sure. Yeah, so I'm just having a look here. So I'm just coming back over to the webinar, see if you guys have got any questions on that. But the main part is going through these events. That there's a little bit of a process. There's the same as your sort of daily routine, a trading routine around your process around trading economic numbers should be very similar to your morning analysis. Check out except we're going in micromanaging the actual release itself. Then you're checking out the technicals. Unfortunately, in this situation, as I mentioned, the technicals weren't great. So primarily with even Euro yen having a bit of a support line on the downside, that's like 60 points away, 70 points away. It's going to be a stretch. There was no real good technical setups here to really rip our teeth into. All right, and the data, as expected, we move on to the next number. So the smart thing to do at this stage, if I can just get rid of T-Rex there, is go back into your economic calendar, whichever one you're using, and then actually start looking at, okay, where's the next sort of major raw nerve for the market? Now, this industrial production numbers here out of the US, we haven't had any major US numbers all week. I know it's only Wednesday, but this is a chance for the US to sort of pop its head up, give us some sort of indication of what's going on in the economic side of things, and we may see a potential move there. Now, weak numbers, we should see Euro higher. Okay, so that's one thing to sort of keep an eye on. But the bigger event of the day is definitely the Bank of Canada rate decision. 1.25%. They do expect a 25 basis point hike. Now that's so when you do come into the CAD, I'll just give you a bit of a quick preview on this one. Okay, now take a bit more time with this if you are trading it. It's going to be too late for me. I mean, I'm a bit of a sleeper, so it's right in the middle of my evening, 2 a.m. So so you'll be looking at the dollar CAD, right? The major pair going through CAD yen, Euro CAD, and even looking at sort of crude and the dollar index, a few other things as well. Anything to do with the CAD, sterling CAD, Aussie CAD, anything. Get them up, see where the technicals are, see which pair has the best technical setup. That's the one you want to focus on. Now, as a bit of a precursor, and I sort of was covering this in the next best trades, I'm sort of thinking there's too much. I think there's too much at stake. Let me just go back here. I think there's too much at stake for the Bank of Canada to sort of raise rates. I know that the economic conditions sort of warrant it, right, or the economic numbers, but you know what? Waiting one extra month isn't going to hurt. And if Trump pulls a NAFTA fiasco, right, then that's going to really potentially impact Canada massively, right? So that would mean the Bank of Canada would have to wind back some of these rate rises. So I'm thinking we might see no change. It's not really a left field, but there's 90% factored in that they will raise rates, right? Now that is more often than not the way it goes. I think the danger is if they don't, right, it shoots up here towards 125.10. So even if they don't raise, I think they will be very aggressive in their statement. If they raise rates, they may be a little bit softer on the statement. So we might see it sort of drift lower, spike down towards 124 and end up sort of back where it is. But if there's no change, I think they'll be aggressive with their statement. So we'll see a spike up on the actual rate decision and then a massive or a big move lower with next month definitely factored in for a rate hike depending on what happens with NAFTA. So make sure you go through dollar CAD, go through your yen crosses, your CAD crosses, and really tune this one up, it's definitely this is where your detail work here in the back end. This is where the cash is, right? So if I just come over here to a bit more thorough technical side of things, this is the CAD crosses. So I've got dollar CAD and I've got Aussie CAD, Kiwi CAD, Euro CAD, Sterling CAD, and CAD Yen. Now you've got to be able to find a good target here. Now, one other thing, just before I finish up, is just think of the pairs when you do sort of go through your analysis here. Okay, think of sterling. What's going on in sterling? Right, sterling's all over the shop. Is it going to be the best pair to trade? Well, short term, you will have a trade there on the CAD, sterling CAD, but there may be other things happening with sterling because it is, we've got Brexit and a few other things hanging over it. Euro or Euro CAD, I mean, it's looking like a better target, especially if we start to see it dribble off. It's still hanging around 122.40. Euro CAD to the downside on a rate hike or a strong statement could be a very nice pair to trade. And you can sort of see the setups pretty quickly. If you look across your charts here, across all the other pairs, just looking at Aussie CAD here as well. So Aussie CAD, I mean, look, they've all got pretty good support trend lines. There's a couple of short-term nice resistance trend lines as well. But just make sure you go through all of those, and then make sure finally before you hit it, I just check the other pair. Like dollar yen at the moment, it is trading a little bit sideways, right? But to me, it's got a sort of downward bias. So so weaker CAD yen may be better. You've got to sort of weigh it up, look at the data, see where the retracements are. Now, actually, one thing is, if they don't raise rates, you would expect a 50, to 70-point move. All right, so you may want to have a look at that. May wait for it to spike up through that trend line and back down, but you just want to wait for that reaction as well. All right, so any questions there, guys? I mean, I was looking at my fast screen, so I can get a chance to keep coming back to the question area. Would you chuck in the tighter euro yen trend line, Brad? That is in the cloud. Let's have a look at that. Good one, Casper. Actually, I need to pop that up. Yeah, you're saying this one here, Casper, like actually draw in this tighter one. We're sort of now making it fit. You're making it fit the puzzle. I mean, I actually like trading the euro yen, especially through the clouds. But basically, with the bottom here, I'm looking at the major trend lines that have actually touched a few times. So that's actually looks really good. You'll know when they do. Don't try and make some of these trend lines fit just because they. Let me just come up here to the top. I've just hit something crazy there. Oh. I was going to say, basically, there's a bit of resistance on the top, but it's not really where the cloud is at this stage. Let me just pop this up. Where are we? All right, so basically, yeah, euro yen's got some sort of action here, but is that what you were talking about, Casper, the tighter euro yen one? So I wouldn't actually go with that. I wouldn't tighten that up any further than that. If it either fits or it doesn't. And my ideal situation is, as you guys who have been around a while would know, where the trend line sort of comes in the cloud or close to it. Like this puppy here, that's looking a bit better there, sterling yen. And you can see here, there's always a little bit of common sense in these things as well. If I just come up over here. See, I think this is what OJ is sort of referring to as well. Like, you can find some levels here. See, since this massive spike up in sterling, there's been a sort of bit of sideways activity in sterling yen, very similar to bit of sterling. That trend line there even looks even better than the one I just drew, okay, because it comes out at the bottom of the cloud. It matches up where traders, potentially would be drawing a short-term trend support at the top, and that looks like a much better level there, around 152.10, so 70 points lower. So we might see that come into play over the next sort of day or so. All right. Anyway, that's exactly where we are. Now, if I just, and there's euro. Okay, still banging away in the 40s. As I said, nothing in those numbers. A little bit of a square up. There's not much else coming out in Europe except for that geopolitical rubbish. So the next major release will be the US numbers, followed by the Bank of Canada, and that's where the action's really going to be. All right, guys, and that's yeah, that's pretty much it. And this will be up on the side as well, so you can actually have a look through this. I mean, as I said, this is spending some time going through some of these bits and pieces will allow you to develop your skills of analysis much quicker. Now, I'm sort of rushing from one thing to the next. I know I can go on a tangent very quickly, but what I want you to understand is how quickly you need to be thinking, have preparation before these events. Now, I would have looked at this morning, had a fair idea of what was going to happen and what my plan was. You want to do that, in your own time as you develop your skills. You'll do that quicker. I can tell you, presenting and talking about it whilst actually trading is a hell of a lot more difficult, I should say, than sort of just trading yourself. But I've been around enough to sort of really, hopefully, put it together. All right, guys. Well, not much there on the euro. A little bit disappointing. It means we move forward to next week's ECB for see what happens with that. That'll be a prime event. It's still on the cards with these numbers. But definitely, if you're in that North American region or even in Europe, make sure you check out the Bank of Canada rate decision. If you're in the Asian area, it's a very late release. Get up if you can, but just be aware those central bank announcements. You can see, 250 to 300 point moves. They are usually left field events, but with the rate hike 90% factored in, I think, we won't see a huge move on the rate decision unless it's a no hike, and we'll come down to the statement. All right, chaps, we'll leave it there. Thanks for joining us. We'll get this up on the site, and we'll keep charging forward. All right. Cheers, guys. See you later.